Hello guys, welcome once again to Traders Delight. How have you been? How is trading? Hope you are getting a hand of it, and hope you are getting very good result. You're welcome if you are an old subscriber. Thank you for subscribing to my channel. And if you are new, this is Traders Delight, a channel dedicated to giving back and sharing free trading strategies. And I really recommend that you subscribe and hit the notification bell, so that once I create a new video on any strategy or information I think you really need to learn and know, you will be informed on time, and then you'll be able to apply that to your trading strategy. So today guys, I want to share on the first uh, uh, indicator. There's a playlist I have that says understanding indicators. I realized that the success or failure of people in the trading market is really anchored on their knowledge of indicators. Many times people expect some things from indicators, whereas those indicators are designed to deliver something else. You need to understand what the indicator is designed to deliver and how you can use it to your benefit. So understanding it will help you to know how you place a demand on it, and also can even help you in mixing it together to create a very powerful strategy for yourself in future, and then getting the best out of it. I have very powerful strategies that are coming up. I'm telling you, once I share with you, you'll be surprised that those kind of strategy could exist. I'm telling you, they are very powerful strategies that once you hear, you will get the best from the market. So today, uh, the indicator I'll be talking about today is moving average. I know you guys know you never moving average, and when you want to get what moving average is, you go to this F button, and then most of the time you see on the chart there's a moving average there, and you see there's a 50 period 50 shift 0 exponential method exponential apply to close moving average, and you see the style and everything. But what does this moving average mean? What is moving average? Now, when you're talking about moving average, you're talking about a line, and a line that shows to you the flight of a commodity. When I mean flight, it means direction. There's something called vector. Vector is talking about direction. To say, is it going up? Is it going horizontally? Is it going down? So you want to know what is the direction, how is it moving, and when we are looking at it, you have to first of all understand what is the power of what I'm about to use. What can moving average deliver to me? Then you now know how to apply it. Take, for example, you take a moving average and then you want to use it. First of all, you must know the moving average I want to use, in what time frame do I want to use it? Time frame, what I mean by time frame is this. You see this, when I click this, you see the 1 minute time frame, the 5 minutes time frame, there is the 15 minutes time frame, there is the 30 minutes time frame, there is the 1 hour time frame, there is the 4 hours time frame, there is the 1 day time frame, and there is a 1 week time frame, and also there is the month time frame, as you can see. So you ask yourself, what is the time frame I want to use it with? Because that is what's going to help you to know the result to expect from the moving average. And you can see this is the moving average 50 on a 1 minute time frame. Look at it on a 15 minutes time frame. You can see it's giving. Look at it on a 5 minutes time frame. You can see it's giving something different. On a 1 hour time frame, look at what it's giving. The same moving average, but on different time frame is giving different things. So I want to make you understand what makes the moving average give different results. Now, let's go to our indicator settings and see. Now, When we say moving average, you can see there's something here called period. Now, the period means the space, the time in between the event, how the record you are about to get, the result that the indicator wants to give you, within which time frame, within which space, within which space. So, say for example, you are saying, I want it to be period 50. Now, period 50 on a 1 minute time frame means that this 50 you have added, it means that the moving average indicator will take the last 50 candles. You know, one candle on 1 minute time frame is 1 minute, right? Good. It will take the last 50 candles, sum up the values together, for the high, for the low, sum it up together, divide it by 2, divide it by the average number, which is 50. Take for example, note the average. When you say average, you know, moving, like I told you, moving is direction. It shows it is moving. That is clear. The reason why it is moving average, because the average part says once it add up those 50 candles on the 1 minute frame, if it's 1 minute time frame, that means 50 minutes, last 15 minutes. For each minute, you have each candle. So it will pick the value of each of those candle for the price and then divide it by 50. So average means take the number of entries, calculate, add it together, then divide it by the number of entry, which is to say, if you want to look for the average of three numbers, you sum up the number together, you sum the 3 numbers together and divide it by 3. So that is what the indicator does. It takes the last take for example, for period 50, it takes the last 50 candles divided by 50 to get to plot the next one it's going to plot. So what that is showing to you, it is showing to you a single spot that is now connected by a line, and it's now used, you cannot use that to predict either it is going up, coming down, or moving horizontally when you look at it. So you see that this moving average for a 1 minute time frame, you are telling the moving average, tell me what you can predict from the last 50 minutes in the market. So the moving average can tell you and say, in the last 15 minutes, sir, in the last 15 minutes, the market is going down. Now, this does not mean that it is giving you what is happening in the last 50 days. It is going to use the time frame that you have. The time frame that you have is what is going to use to give you the value that you are expecting. Now, if you change this thing and change it to 5 minutes time frame, it means that for one candle, it is 5 minutes. So this means that once you are about to plot the moving average is going to take for the last 50 candles. And you know, one candle is 5 minutes, which is to say 50 times 5 is 250 minutes. So it's giving you an information of the last 250 minutes, which is why you see that once you're about to trade on 1 minute time frame, you are always advised to check a higher time frame, because once you check on 1 minute time frame for 50 minutes now, you know, for 50 period moving average, it gives you the last 50 minutes. But once you are using a 5 minutes time frame, you are able to see not just the last 50 minutes, but you're able to see into the last 250 minutes. As you go further, it keeps increasing. If you go to 15 minutes time frame, it keeps increasing. You go to 30 minutes time frame, it keeps increasing in a bit. You know, when you are in 30 minutes time frame and you are saying given the period for period 50 moving average, given the period on a 30 minutes time frame, take for example 30 minutes time frame, what you are telling it to do is to take 30 times 50, which is 1,500 minutes. So it's calculating for the last 1,500 minutes what is the direction of the market. So that is why it is called a trend indicator. So you need to understand what you are using so it will help you to get the best out of the market. A trend indicator, it's going to give you what is happening, but it will only work based on the setting you give. So you see, when you are on a 1 minute time frame and you go to the indicator setting and then you add a moving average and then you decide to add a moving average of 5, what you are saying is that take the last 5 candles and give me the average. So if the indicator on the 5 minutes, on the 5 period 5 is giving you based on last 5 minutes, you can see that based on last 5 minutes, the market could take any direction. Market it might not be a very good judgment of the direction of the market. This is why most of the time you are advised to use a high moving average. You realize that most of the time when you are seeing a strategy, the person is either using a moving average 50 to take the trend, or a moving average 200 sometimes to check the trend. The reason for that is once you're able to gather enough data, enough time frame, if the period is able to capture enough time frame, enough time, you are able to tell with time what the direction of the market really is. So you can't really tell what direction of the market is on a 1 minute time frame, or if you are using a very small period. You can only tell if you are using a big period, and that is able to go further and give you what the market is really saying. So I want you guys to understand this, and this is the first understanding. Now, we have talked about what the period is, and as much as possible, I don't want it to take too much of our time. I will do this in part. We have talked about what period is, so to help you get this, because I don't want to, if I want to explain what all this is. When you say period, when you say shift, when you say method, when you say apply to, I want to explain all this, but I want to take time because the video now is more than 10 minutes, and I want to, as much as possible, don't want to make it too long. So I want you to please digest this, understand that your period here is very important as much as the time frame you are using it for. So for your knowledge of moving average, know this: the result of moving average is as a result of calculating the total number of value over a period, which is determined by you, either period 1, period, you can even go as long as I've seen a moving average of period 800 before being used in a strategy. Depends on how you want to go about it. Now, once you are able to do that, then it's going to give you a value based on the time frame you want to use. So the time frame you will determine the amount, the trend you want to predict for that particular time. So for different time frame, your moving average will give you different results depending on the data it's able to gather within that period. You get it? So if you have any question, please comment below. I want you guys to understand it. When you understand this, it will be easy for you to come up with strategies. The strategies I come up with is based on my understanding of the indicators. It's not just based on guesswork. It's understanding of what the indicators do and how to now use those indicators to develop powerful strategies that will help you milk the market and get the best from it. So if you are watching, please subscribe. There are more content, quality content coming your way. I'll be posting as often as possible. Read, watch it, and then apply it. Moving average part 1, watch out. I'll be posting understanding moving average part 2 for you to have a better understanding. Then we'll move to why we look at the shift. What is the shift? I hope I can combine maybe the shift and the method for the next part, so I can understand how to use the shift to your advantage, how to use the method to your advantage. After this, we'll now begin to make videos, and I will begin to show you some very, very simple strategies you can do using your moving average, and then without making the whole thing very complex, and get a very, very good result. All right, guys. So that will be all for today. For now. All right. So I wish you all the best.